Hi everyone, today we're going to talk about Fibonacci's and how we can use them on the chart. Okay, so let's get a new chart. So it's white, it's brand new. Remove the drawings. Okay, so my Fibonacci levels are this one. Okay, so as stated in the first video on the chat, these are my settings if you want to copy them. Okay, and how do we draw the Fibonacci? Okay, so first of all, we need to identify the dealing range we are currently trading in. Okay, so this depends on your trading method and on what type of trader you are. For example, I'm a day trader. I was a scalper back in the days, but now I chose to day trade only, because for scalping I have my bots that do the work for me. So if you are a scalper, you want to trace your dealing range on a 15 minutes, okay? 15 minutes / 5 minutes. And what's the dealing range? Okay, let me help you identify it. So we gotta start from the beginning. What's the trend? Our trend right here is this one. Okay, so bam bam, this is our trend. Okay, then once we see a breakout, we have a new trend, the opposite trend. Some of you could count this as a low. You can do it, but on a Fibonacci it's not that useful. Okay, so this is our new low, high, low, high, low. So we are going to draw our Fibonacci from the latest high to the latest low, if it's a downtrend. Okay, so like this, and we can mark some zones out. First, the 0.5 is the equilibrium zone. You don't want to sell here below the 0.5. You don't want to buy above the 0.5. It's like buying when it's expensive and selling when it's cheap. It doesn't make sense at all. We are in a downtrend, and we know for sure that in a market we have impulses and we have pullbacks. Okay, so after the impulse we want to see a pullback, because the market can't not run so we have impulses and we have pullbacks. We cannot have a market that goes down all the time or goes up all the time. It doesn't have liquidity to work with. Okay, so once we have this situation, we wait for a pullback. And what's the most probable zone for a pullback to happen? It's this one. This is called the golden zone. Okay, so you get plenty of trades in this zone. It's a fantastic zone. You have some confluences. Okay, you have, for example, I don't know, this is a fair value gap, this is a liquidity void, this is a order block, this is what the fuck you want. If you are in that zone, it's very probable that you're going to take TP instead of stop loss. So Fibonacci's are very important, and other people use Fibonacci to predict where the market goes. I'm not teaching that, because you need to react with the market, not predict the market. That's why a lot of people loses. You don't open a trade just because it tapped to an order block, and that's why we use footprint charts. It taps into our order block. We see that it's actually having some influence on the market, that order block, so we enter the trade. We don't predict the market, we react of the market. Let's see some old trades. This is one of my oldest trades, and the not the oldest, but one of with the highest risk to reward ratio. Okay, so here we are. This was taken on April 2024. As you can see, our dealing range was this one. I took the Fibonacci from this point to this point, and here on lower time frames we had a nice fair value gap, and guess where it was? On the 0.705. So golden zone. I really like the 0.705. Like if you can open a trade on the 0.705, it's the best you can do. So trade right here, stop loss above the fair value gap, and the take profit was here, which is what? This was a volume profile POC zone, so such as this one. Okay, so we are going to talk about this one in the future lessons, but this was the trade and it was fantastic. See ya on the next lesson, and for today this was it.